Good morning, everyone. I'm Vince Lancy, and this is I guess we should call it the Silver Fix today. Today, we're going to be talking about Doug Casey's recent interview in which he says we're going to see 100 or $200 silver in the next few years. And we'll go through the markets as well as recap what's going to be coming this weekend. There's the first story. We're not there yet. So let's put up the new logo. 10-year yields are up 4. The dollar is 99.02, up 32. The S&P 500 is up a very nice 52 handles at 59.82. Gold is 33.55, up $3. Silver is 36.17, up 50 cents. Got close to 36.50. Copper is 4.85, down a penny and a half. WTI 63.65, up 16. Natural gas is up 6. Bitcoin up 2,000, but recovering after a 2,000-point sweep last night. Palladium and platinum both up very strong. It's white metals today. Gold, silver, lower. Grains are mixed, and you can see the rest. This is behavior you'd expect if the market were looking at a Fed cut or relief in the China-US situation. And things of that nature. You may be asking yourself, if you're uninitiated, why is copper down if that's the case? Because the world is long copper and short silver and long gold. So gold's still doing okay because no one's going to short gold, but everyone is putting it on the other way now. CTAs, hedge funds, banks, prop traders, everyone's doing that. I don't know if they're putting it on or closing out, but they're doing something. All right. There's the home page. 1, 2, 3. Well, 3 out of 5. Not bad. Silver stories. Here we go. Here's a story. We had the pleasure of reading a timely conversation Doug Casey had on silver and broke out some interesting points he made. Doug echoes our own sentiment that while gold is money, silver is more. I will fire the intern for that typo. Doug starts off saying, quote, silver has always been a monetary metal, and it likely always will be. And from there, it only gets better. There's the story right there. In the interview, a couple thousand words, Doug argues silver is historically sound money and currently undervalued, especially in a coming monetary crisis. Its dual role, monetary and industrial, make it uniquely positioned as both a hedge and a speculation. Silver's affordability, growing industrial demand, and under ownership create asymmetric upside, echoing things that we've been saying here for a couple years now, and probably everyone else you know has, right? He concludes silver will become the, quote, people's safe haven amid fiat collapse, debt crises, and systemic instability. Silver is, we add, the best of both worlds. And we frequently say gold is money, silver is much more. Those of you who've been with us for a long time know that in the beginning, we didn't think silver would become money again. And we still don't get mad. We still don't think silver will ever be fully remonetized to the effect that gold has. And that's because it's too important. It's a strategic metal that's so important that they won't call it that because we need it. You call it strategic, you restrict supply all over the place. We need it. And so does China. And that's why China is buying concentrate in unprocessed form and paying for the processing themselves before it ever hits the market. Another reason COMEX is dying, but I digress. Moving on, it's a very good interview. He makes some good cases there, and we spell it out and add some, we think, pretty cool block graphics. Coming soon this weekend, end of the COMEX era. That'll be coming out this weekend. HeartNet's macro breakdown. That's a reader favorite, in which we do a walkthrough of probably the best macro analyst on the street, most recognized macro analyst on the street, Michael Hartnett, with a hat tip to Zero Hedge as well. The post-COVID world, that's a university lecture that I gave. And we have some special founders content heading your way today privately via email. Related posts, Related posts include silver breaks 3.5, 35 up 8.5% in 4 days. Silver's where gold was 16 months ago. We strongly recommend if you're looking for some explanation beyond the we like silver. That's a conversation that I had with Jordan Royburn, and we talk about the parallels between gold 16 months ago when we both had a moment of, oh shit, this is probably going to go up a lot higher now, and silver now, not immediately now, but silver on June 30th if things hold their own. There's the Doug Casey post. Stablecoins will rescue the U.S. bond market. We've contended for a decent amount of time now that Tether and stablecoins are going to be a Western product that will be used to harness treasuries in a collateral fashion that will be essentially become a country buying our bonds, and that country will be the U.S. citizens. We must buy our own bonds again, and stablecoins are probably the way we're going to do it. War to oil shock mechanism reminder. That's a comment by T.S. Lombard on the fact that uh, even though the Ukraine Russia war is escalating, it's not part of the mechanism to shock oil higher yet. Natural gas, however, is a completely different story. And that's it. Moving on, the data on deck today was unemployment or employment. It was due about 125,000, give or take. Non-farm payrolls came in a little higher than expected, 139,000, 125 was expected. That, as a higher number, would be supposedly bearish for stocks, or at least not bullish. But stocks seem to be ignoring that right now. Let's pull the charts up while we're doing that. Oh, there you go. And we'll pull up the stock market. And we'll make it an hourly. Yeah, stocks like it. There also were some revisions of previous payrolls higher. Zero Hedge notes that the Biden playbook is at play. Uh, I'm not sure what that means anymore. But there you have it. So the behavior coming out of the number is gold down, stocks up. Silver off its highs, but certainly not weak. Trading 36.03 now. We've left a lot of comments about silver. Yesterday, the thing we said, I think that we want to stick by the most here is that when silver was trading 35.50, we said in our thread, we think 38.50 will trade before 32.50. So $3 higher before $3 lower. Doesn't mean we won't trade $2 lower before we trade $2 higher. That's the nature of the volatility now. The COMEX is now raising margins, killing their own franchise slowly to save the short banks. And, well, from here on in, it's a crapshoot, according to me, $2 either way. But $3 either way is not a crapshoot. So we think it'll be $3 higher. We do think that what you're looking at right now are those people that would be buying on June 30th getting ahead of the curve. Now, that's not always a smart thing to do, but that's what they're doing right now. I have silver up. I mean, I should have silver up. There you go. That's pretty, right? All right, up, and away. I'm Vince. Have a great weekend. Hope to see you on the site.